Coinbase. You know the name. It's pretty much synonymous with a crazy roller coaster that is the crypto market. After a massive boom, an absolutely brutal bust, and now a pretty powerful recovery, you've got to ask, is Coinbase a brilliant comeback story, or is it a ticking time bomb? Well, that's what we're going to unpack today. Let's get into it. Just look at this chart. It basically tells you everything you need to know. After a pretty quiet 2020, revenue just exploded to nearly $8 billion during that 2021 peak. Then, boom, the crash. The crypto winter of 2022 hit hard. But now, look at 2024. Revenue is surging again, climbing over 100% year over year. It really does feel like the comeback is on. And that really is the big question, isn't it? Is this time actually different? Has Coinbase fundamentally changed its business, or is the company just riding another crypto hype wave? That's what we're here to figure out. So how exactly did they pull this comeback off? Well, it wasn't just getting lucky. They had a real plan, a deliberate strategy to tame the one thing that has always defined them, that insane volatility. Okay, so this slide breaks down their whole strategy perfectly. Think of the old Coinbase as running on what we'll call the engine. This engine was basically just volatile retail trading fees. When the market was hot, man, that engine roared and they made a ton of money. But when it cooled off, the engine just stalled out. The new Coinbase is all about building the stabilizer, a whole set of steady, recurring revenue streams that are designed to smooth out those violent market swings. So what's actually in this stabilizer? Well, it's a mix of a few really smart things. They get commissions from staking crypto, like Ethereum, which is basically helping secure the network. They charge big custody fees to institutions that need them to hold onto their crypto safely. They earn interest from their stablecoin, USDC. And they even collect fees from their very own blockchain, Base. Now, the key to all of this is that these things make money whether the market's going wild or just sitting there. All right, so that's the plan. But did this big strategic pivot actually work? Let's take a look at the numbers, because honestly, the results are pretty darn impressive. Get this. Back in 2022, during that crypto winter, Coinbase posted a staggering net loss of over $2.5 billion. Ouch! But fast forward just 2 years to 2024, and they've swung all the way to a net gain of over $2.5 billion. That is a $5 billion turnaround. That kind of swing points to some serious operational discipline. And here's the kicker. Their net margin for 2024 clocked in at nearly 40%. Now, what's so wild about that is that it's almost identical to the margin they had at the absolute peak of the 2021 crypto mania. So what that tells you is they're not just profitable because the market is hot again, they are running a fundamentally more efficient company. So how did they get so efficient? Well, and this is going to sound a little crazy, they did it by spending more money. Yeah, you heard that right. Back in 2022, when everything looked terrible, they actually increased their spending on research and development to over $2.3 billion. They were investing straight through the downturn to build out the very products that are driving their growth today. They were literally building a competitive moat while everyone else was just trying not to sink. And the result of all that discipline and smart spending? A fortress of a balance sheet. Right now, the company is sitting on over $10 billion in cash and equivalents. That's a serious war chest that gives them a ton of stability and flexibility for whatever comes next. And maybe the most important part of this whole turnaround is how much they've cut their risk. In 2022, their debt-to-equity ratio was a kind of scary 15. Today, it's just over 1. This is not another one of those highly leveraged, risky crypto firms like FTX. No, this is a business that seems to be built on a real foundation of financial safety. Okay, so the comeback story is amazing. The finances look solid. The strategy seems to be working. Sounds like a total home run, right? Well, not so fast. This is where we get to the investor's dilemma, the reality check. You'd think with a turnaround this strong, Coinbase stock would be a surefire bet, a total no-brainer. But as we're about to see, the story of the stock itself is, well, a lot more complicated. Let's put this in perspective. Over the last 5 years, the broader tech market has been on an absolute tear. The Nasdaq is up over 66%, and Coinbase stock, it's down over 51%. It has completely and totally missed out on one of the biggest tech rallies in recent memory. And this chart, this one really hurts. It shows what some people call the proxy problem. See, a lot of people buy Coinbase stock to get exposure to crypto.
But over that same 5-year period, while Bitcoin itself is up almost 80%, Coinbase stock is down 51%. That's a massive 130% performance gap. It all comes down to that classic gold rush question, right? Do you bet on the company selling the picks and shovels, or do you just go out and buy the gold itself? Well, in this case, buying the gold, Bitcoin, has been a vastly better investment than buying the shovel seller, which comes with all the headaches and risks of actually running a business.
And look, the market has definitely noticed this turnaround. The stock is no longer that beaten down bargain bin asset it was back in 2022. With a price-to-earnings ratio of over 14, it's pretty clear that a lot of future growth and a whole lot of optimism is already baked into the price. The stock isn't cheap anymore. And on top of that, there are still some pretty big clouds on the horizon. You've got competitors driving a race to the bottom on trading fees, which could really squeeze Coinbase's margins. You have the constant threat of regulatory uncertainty, especially in the US. And yeah, despite that new stabilizer, another deep crypto winter would still seriously hurt their bottom line. So, where does that all leave us? We've got a really clear bull case based on a phenomenal business comeback and a pretty strong bear case based on how the stock has performed and the risks ahead. So let's put it all together and come to a verdict. So here's the breakdown. On one hand, the bull case. The financial turnaround is real, they've got a fortress balance sheet, and a dominant moat, especially with institutions. On the other hand, the bear case. The stock has historically underperformed Bitcoin itself, there are huge regulatory question marks, and the valuation is already pretty high. So the final verdict from our analysis isn't some simple buy or sell call. It's that Coinbase should really be viewed as a high beta infrastructure play. So what on earth does that mean? Basically, it means this isn't a simple bet on whether the price of Bitcoin is going to go up or down. No, it's a bet on the entire crypto economy growing. Things like DeFi, Web3, NFTs, all the stuff that needs the basic pipes and plumbings to function. And Coinbase provides that plumbing. It's a bet on the infrastructure of this whole new world. And that leaves us with the one big question that you, as a potential investor, really have to answer for yourself. Is betting on the picks and shovels of a new digital economy a smarter long-term play than just buying the digital gold itself? That right there is the billion-dollar question. And of course, just a quick reminder, this analysis is for informational purposes only, and it definitely does not constitute investment advice. All the data you saw today was as of February 6th, 2025. As always, make sure you do your own research before making any investment decisions.